Hi, I'm Dean Parker and welcome to our latest video blog for the PropertyInvesting.com community. On this update, we're going to talk about financing projects. It's a bit of a hot topic at the moment. The banks have definitely tightened up. I'm actually over in Adelaide right now, catching up with a good mate of mine, and we're going to talk about some of the deals he's got on here and comparing that to what's happening up in Brisbane. I'm actually in Adelaide with a good mate of mine, Martin Ayles, probably a familiar face to most of, or some of you as well. And we're going to talk about financing deals, and in particular this one that Marty's got on the go at the moment. So mate, welcome, how you going?
Good mate, good, thank you for having me.
That's good. What are you building on this site? We've obviously just look like you're ready to pour slabs. What do you got going on here?
Yeah, so this is a residential site. There's 6 two-storey townhouses going on here. We're about 12 k's from the CBD.
Yeah.
And they're all 2-storey, obviously, like I said. They've got 1 bathroom, 2 bedrooms upstairs, and a second toilet downstairs.
Okay, so from a financing point of view, I take it this was just a piece of land that had a house on it originally?
Correct. Yep.
So when you financed that portion of it, did you get a standard home loan or did you get a commercial loan?
So basically I went to the bank with a proposal, a feasibility, set of plans, concept plans.
Yep.
Didn't have approval at that stage.
Yep.
They gave me pre-approval for the construction finance, and they gave me the first draw of that construction loan, if you want to call it that,
yep,
of the business facility. It was through Westpac, one of the top 4, which I always sort of try and deal with.
Yep.
And they funded the purchase of the home, and then once I got my approvals, my contracts in place, the valuations, then they basically increased the limit of that facility so I can undertake
Okay,
construction.
so you've got one facility, one to settle the land.
Yep.
Now that you've got all your permits and your building contracts in
Correct.
place, you've increased the facility to cover your construction component of it.
Exactly right.
All right, and from a financing point of view, I mean, what sort of typical interest rates you're paying for this sort of product?
This here is just over 4.5%, so it's
Yep.
about 464 or something at the
Which is a
moment.
really good rate.
Yeah.
Pre-sales, tell me about pre-sales
No
here.
pre-sales on this site, so fortunately had a fairly strong application. Bit of past experience obviously always helps.
Yep.
Traditionally on a site like this, the bank would ask for pre-sales, perhaps maybe 2,
Yep.
to try and clear a portion of the debt down.
Yep.
But on this, given it a lower value sort of site and it's affordable housing, it wasn't a huge risk for the bank.
Okay, but I guess you've probably tipped in a little bit more money and your
Correct.
LVR's a little bit lower on this site to avoid the
Yep.
pre-sales?
Yep, so obviously the more equity you tip in, the better the terms of the loan usually.
Okay.
And in this case, it's been a fairly fair split down the middle.
Okay, and I guess to give a bit of an idea based on maybe a year ago, if this site was in Brisbane and we were doing a 6 townhouse site like this, we probably would have needed maybe 1 or 2 pre-sales, if any.
Yep.
In today's environment, if we wanted to go up to that sort of maximum LVR and get as much as we could from the banks, we'd probably need maybe 2, 3, possibly even 4 pre-sales. Like at the moment, they're needing sort of 100 to 120% debt
Correct.
coverage, which we can explain.
And one of the things I always try and say to people whenever I'm helping them is that if you can look to clear your debt through your pre-sales, it's always a great safety net for you as the developer or the builder. And secondly, that most banks now, as a rule of thumb, anything over 4 homes or 4 individual townhouses or whatever, will generally ask for pre-sales. So as a rule of thumb, ask your bank, if I'm building more than 3 or 4 homes, what do you require?
And that is the main message, I guess. Financing is changing a lot at the moment. Like we're in Adelaide here at the moment. Marty's doing 6 without any pre-sales, but he's obviously putting a little bit more money in. 12 months ago, it was different than it is today. So yeah, so it is changing a lot. You've got to make sure that you're keeping in touch with your financiers. There's plenty of options out there because everything does move really on a day-to-day basis. And I think what I'm seeing at the moment is the sites coming up at the moment because people just can't finance those. So it is very important to keep in touch with what's going on in the finance world. So that's been our update for this video blog. I guess the 3 main points are the finance is constantly changing at the moment. You've got to make sure you've got really good relationships with the financiers out there and make sure that you're in constant contact with them because things are changing on a daily basis.